Breaking news alert. The recent failures of banks in the US and Switzerland has sent shockwaves through an already fragile economy. But how does this affect our Denver metro area real estate market? Well, according to Lawrence Young, chief economist of the National Association of Realtors, when talking about news on mortgage rates today, due to the bank failures, he said the Federal Reserve cannot be so aggressive in raising short-term interest rates. Therefore, mortgage rates will decline. You know, mortgage rates have been steadily rising in the recent weeks, with the 30-year fixed loan rate averaging high sixes, low sevens, according to Freddie Mac. Hi, I'm Peggy Dursthoff at Live Denver Suburbs, powered by HomeSmart. And after a long period of high mortgage rates, we're finally starting to see some slack. Yeah, the Fed's been making a series of aggressive rate increases, trying to get us down to that 2% inflation rate. And sometimes these rate increases influence mortgage rates, which is what we've been seeing over the last few months. Home buyers have been up against affordability woes as mortgage rates have literally been double what they were this time last year. You know, the shutdown of that Silicon Valley bank was actually the second largest bank failure in the U.S. history, and really the largest since about 2008. And the bank itself was known as a large supporter of tech startups. So as we look ahead, this could mean some trouble for the tech industry. Some of those businesses that were relying on funding from the Silicon Valley Bank may lack the funds to continue the businesses and have to cut back, which could impact job losses. And I've actually seen that recently with one of my clients. He lost his job in the tech industry and luckily was able to find another one within a month in the tech field. And that's really reflective of the declining unemployment applications that we're seeing in the Denver metro area, making for a really tight market. You know, Yun said some local housing markets, especially California tech companies, be hampered by job losses. But he said that broadly across the country, more and more home buyers are going to be entering the market because of lower mortgage rates. So what does this mean for you? Buyers, be prepared to lock in a low rate when the time is right. In the meantime, you can reach out. We can offer you a trusted mortgage professional who can help you get pre-approved for a home loan. In fact, I just had some of my buyers lock in their rate last week when the rates dipped. And if you've been thinking about selling, now is the time to start preparing your home to get it listed quickly, because a dip in the mortgage rates could mean more and more buyers coming on the market, and you want to take advantage of a possible increase in demand. Just to be clear, I don't have a crystal ball, and no one can predict with certainty how the banking crisis will play out and ultimately impact rates. We could still see some major volatility in the mortgage rates in the coming months. That's why it's critical to work with knowledgeable real estate professionals, monitoring the situation closely, and will be able to best advise you on your next steps. So if you're thinking about making a move, reach out. My name is Peggy Dursthoff with Live Denver Suburbs, powered by HomeSmart. If you enjoyed this video, go ahead and check out this one over here. I actually talk about market conditions right now in the Denver metro area. Thanks for watching, and I'll see you next week.